In looking to understand what, as I call it, the anatomy of a pullback, what I've done over the years is looked for a simple way to grade a wave that, on the surface of things, is a retracement wave or a pullback or a phase two, all the same thing. And to be able to do that quite quickly as well. So we don't want to have or need to have multiple candles in a wave in order to be able to make a good qualitative assessment about the nature of that wave. So uh, another thing to bear in mind as well is that this does tie into the discussion around inside bars or inside candles. So for those of you who are obviously trading our impulse family strategies, but and even the trend continuation strategies like short kickstarts and so on that we've done trading on through the years, the inside bar, the concept of an inside bar, uh, is something that you need to understand, and you need to understand not only what it is, but how to deal with it. So the the idea of being in a pullback uh, needs to be seen in the context of the different types of candles that can and do feature inside of these waves. Now, of course, if we were talking about a phase one wave, a high quality wave, certainly last week's bearish phase one impulse wave was very high quality, 3 impulse candles in a row, absolutely. That is a high quality wave. Uh, and likewise, if we saw something like that in a phase two wave, we would start questioning that. But that's not the primary issue we want to deal with right now. So, as you know, we are currently in a phase two wave here uh, with this currency pair. And let me just show that quickly by updating the analysis. We've got this low, this preceding low, very much isolated. Uh, the low was isolated by an inside bar, a bullish inside bar or candle, of course, very strongly bullish, even though it was not an impulse candle. It certainly closed higher than the previous day's open. So that is definitely a strongly bullish candle, even if it's not an impulse candle. But it was followed up by yesterday's candle, which of course was an impulse candle. However, this is still a very high quality pullback from the point of view of being a pullback. So when I talk about a high quality phase two, it would very often be the opposite of what we would be looking for in a phase one. But remember, the qualitative differences that we're looking for are important here. First of all, I want to point out that we effectively have 4 types of candle pattern, especially if you are looking at uh, I'm just going to look at the bearish case, which is what we are currently looking at. If we were to have a bearish impulse candle here, I'm sure you would agree with me, that would be absolutely a potential setup for us to go short on this using the looking at the H4 time frame. Likewise, if our selection criteria were met on the higher time frame on weekly, likewise, we would be looking to short this market at the open of the next candle if we had a bearish impulse candle. But remember, we are only looking to do that immediately after a pullback. And what then qualifies as a pullback? So if you're going to do that, you need to recognize that, first of all, we're not now considering our impulse candle. We need to look at the preceding candle, starting obviously with the first preceding candle, but you need to compare that to the candle before it. So if this being now the preceding candle, let's just assume that this here is our setup candle and therefore an impulse candle. And I'm just going to move it a little bit out of the way just to avoid confusion. This pattern that we are looking at over here is what is important. Now, this is the first type of pattern. So here we have a candle with a higher high and a higher low. That for me is the best type of pullback. I'm not interested in closes, as you can tell at the moment. That's a topic we will leave for another day. Let's just get this under the belt first. We're just going to look at the highs and the lows. So here we have a higher high and a higher low. For me, that is already uh, a high quality pullback. And as I mentioned, I use a sort of a shortcut to assist me with this. It also helps in programming as well. So what we basically do is we give it a score. I like to score a pullback where we have, and this of course is a pullback for a bearish trade. I like to score the situation where we have the higher high and the higher low with 2 points. If I get 2 points, then I'm happy, and that's good enough. In fact, the threshold that we need to achieve is 2 points. So this picture here with these 2 bars would give me 2 points. Right, so what is an alternative? Well, an inside bar would be an alternative. So if we had a setup like that, and bearing in mind that we're still looking at this as our final selection criteria with a bearish impulse candle, here we have an inside candle or bar, and that in itself is not that bad, but it only is really worth 1 point. So that on its own is therefore not sufficient, because we would need to have 2 points to be able to go ahead and treat this as a valid pullback. So in order for this to be a valid pullback, what I then need to do is go back to the next candle, preceding candle, and assess that one. So let's assume that this one gives us our higher high and higher low. Of course, that would be 2 points plus 1 point. That's above 2. It would be a total of 3. 1 point for that and 2 points for that candle. Then clearly, again, we are happy to go with it. Likewise, if this had also been an inside bar here, then, well, that's 1 point. And that's 1 point, which means we have a total of 2 points, which again would mean that we are able to treat this as a valid pullback. You'll notice that one inside bar on its own is not enough. Similarly, if we had an engulfing candle here that was not, and I must stress this, not an impulse candle. So this would be our final setup candle. If this was our preceding candle from the setup candle, which would be this one here, and it was an engulfing candle, but not an impulse candle, certainly not a bearish impulse candle. We wouldn't really mind if it was bullish, but certainly not a bearish impulse candle, then that too is worth 1 point, which of course on its own is not enough. So if we only had that to go with, we'd have to look at the preceding candle, which of course is this one, and that too, in this case, being an inside bar, would give us 1 point. So those two together would be sufficient. If that was also an engulfing candle or bar like that, then we would actually also be happy to go with this as a valid setup. Now, I also just want to point out that all of this needs to clearly have come from a point of view of a preceding, well, I beg your pardon, let me just take this out, a preceding bearish wave. So that's drawn incorrectly. So let me just redraw that. So if we had a bearish wave and then we had a situation like this, where we had engulfing candles and or inside candles, but we had enough of them, then we would actually be going for it. This is a very uncommon picture, to be honest with you, is one of the least common ones that you're going to find. All right, so in the context of a preceding bearish wave, of course. So let's just go back to our ideal picture, which would look more like something like that. Clearly, in that case, you can see we had our bearish phase 1 wave. Now we've got a bullish pullback, and that would be a valid pullback. Another example, and it's not at the moment, all I've done is I've shown you candles that are where we're not really interested in where the close was. But if we had a candle that had a lower high and a lower low, as in this case here, but failed to be an impulse candle. Now, clearly that is not the greatest picture. In fact, it is the opposite of that. So that would be the ideal, where we have a higher high and a higher low. This is the opposite of the ideal, but still not completely disqualifying itself because it's not an impulse candle. So if we had this candle close inside the price territory of the previous one, well, it's not great, but we won't give it any score, but it won't disqualify us either. So An inside bar and an engulfing bar, those two we can give 1 point to each. A proper pullback candle, in this case, high, high, and high, low, would get 2 points. But something like this, where, as I say, it's not an impulse candle, but it has a lower high and a lower low, we wouldn't give that any points at all. So in a situation like this, where we have our bearish setup candle, which is an impulse candle, we would look at that preceding candle here and say, well, we can't give ourselves any points for it, but we're not disqualified from considering whether we have a valid pullback or not. What we need to do, of course, is then keep looking back. So we look at this one and say, well, that one's great, it's worth 2 points. If that was let's say an engulfing candle, perhaps like that, then that on its own would also not be sufficient. Okay, we would not be able to go with that, because now we have no points for this one. We'd only have 1 point for that one. And if this was a bearish impulse candle, then that wouldn't work either. So we'd only have 1 point in that picture over there. So we would typically not be looking to go with that on its own. But if this was, say, an inside bar, then perfect. Then we get 1 point for that and 1 point for that. So hopefully you guys can see that by scoring these candles and looking from where we are at the moment and looking backwards, we're able to give ourselves a definitive and quantitative assessment of the quality of the pullback. The one thing I would like to stress here, though, on top of all of this, is an absolutely disqualifying criteria. And that would be if before you get to your 2 points, you have an impulse candle in the direction that you're looking to trade. In other words, in the opposite direction to the pullback, and which, of course, would necessarily be a setup candle. So if this was our setup candle, and we, well, let me just redraw this, and it was, let's say, preceded by another impulse candle. Let's assume this candle closed below the low of the preceding candle. So in other words, if we have 2 impulse candles, this would not be a valid pullback, clearly, because that would imply that we actually missed the trade. And by looking to take a trade now, what we're doing is chasing the trade. And that's something I see that many of you guys have done in the past. You're chasing a trade, and really that just destroys the expectancy of the strategy. So if your preceding candle, the one preceding your actual setup candle, is an impulse candle in the direction that you're looking to trade, that disqualifies the entire picture, because clearly that does not form a pullback. It can't be a pullback. A candle that's an impulse candle in the direction of the trend could not possibly form part of a pullback. Likewise, if we had a situation like this, where we had an impulse bar, and let's say, well, draw that up a little bit further. Let's say the picture looks somewhat like that. If this was an impulse candle here, just highlight that. Well, this is our setup candle over here. It is a bearish impulse candle. It's preceded by an inside candle or bar, which is worth 1 point, which is not enough. Therefore, we need to look further back. And if the candle before that is an impulse candle, in other words, this candle closed below the previous low, then of course that also disqualifies this picture. So that's basically saying that when it comes to your execution time frame, an inside bar on its own is not enough. And that is a bit of a filter, okay, as I mentioned before. So that is something that you could consider to use certainly as a filter. But what you could also then do, of course, is if you're looking to get into the trade, you could assess where the close of that inside bar was relative to the preceding candle's close. So what one variation on this is to say, well, if this inside candle was bullish, then it wouldn't count as a valid pullback. If it was bearish, it would. But that's sort of taking it a little bit further. The other issue with this, of course, is that being an inside bar, we don't have an isolated high here anyway. And as a result of that, the assessment of where we would potentially be looking to place our take profits, I beg your pardon, our stop loss, not our take profit, would be an issue. So we would then be forced to use something like obviously an ATR stop. It's always better to have a fractal. If you don't have a fractal, it means that you haven't really had a pullback. An inside bar can be treated as a pullback. Yes, we know that, but it certainly is not a high quality pullback. And just having one inside bar on its own is certainly, you can argue the case that that is not sufficient for us in terms of quality. Right, so let's have a look at a couple of other examples. What I'll do, in fact, is maybe just drop down to a slightly lower time frame, so we get a higher incidence of examples. So obviously, this is a bit of a bearish situation here. Let me just close that down. Whereby, as you guys know, we had that bearish breakout on Euro USD last week, Wednesday evening. And then we got to ask ourselves, when did we have a pullback? So this is the execution time frame. Remember, that's what we're focusing on, is the execution time frame. The first candle that we can treat as possibly being a pullback is this one. Does it qualify? Well, let's have a look. It has a higher high and a higher low, which means in a bearish trend, that is the ideal scenario. In fact, you get 2 points for that. So it's got a higher high and a higher low. That means it qualifies fully as a pullback candle and gives us the 2 points that we need. Moving on, here we have an inside bar. So even if we did have a bearish impulse candle in the next one, which we don't, of course, we'd be saying to ourselves, that's not enough on its own. Let's go to the impulse candle though, because you're only really going to look at this once you have a setup candle. On the H4 time frame, clearly this does qualify as a bearish impulse candle as we look at the preceding 2 candles lows. So we then ask ourselves, well, what do we have before that? We have here a candle that's in fact got a lower high and a lower low. That is an example of the least favorable example. The best would be a higher high and a higher low. This has got a lower high and a lower low. That doesn't disqualify us because it's not an impulse candle, but it does not get any points. So that gets nil point, which means we need to move back to the preceding candle. This one here has a higher high and a higher low, which means it qualifies for the full 2 points, and you don't need to look back any further. Which means, therefore, this, just because of that candle, even though we had this one here, this does still qualify as a valid pullback just by looking at that candle compared to the preceding candle. If you wanted to look back further, if you wanted to add up a few more points, and by the way, you can, certainly in the trade manager, it's possible to be stricter, and you can require the, you can look, if you want to look back further, you can. If we were to look back further, we would have this as an inside bar that clearly is worth 1 point. So that wouldn't on its own be enough. So if this had been a bearish impulse candle, let's say, which of course it's not, but if it was, we would say, well, is that a valid pullback? The answer is no, but it's worth 1 point. We'd have to look further back. That is also an inside bar, is also worth 1 point. Therefore, those two together qualify this as a valid pullback, even for this candle here. Of course, that's not a valid setup candle, though, so we wouldn't actually use that. So that's a bearish example, another bearish example. And of course, we have had a reversal pattern over here, and I'll come back and look at the bullish case in a second. But likewise, if we were wanting to short the market and we're treating this as a pullback, we would need to wait for a bearish impulse candle. So here we have a bearish impulse candle. And we would need to then look at the preceding candle. This one over here is not an impulse candle, but it's got a lower high and a lower low. So it's not worth any points for a bearish setup. This one over here, this candle is an inside candle, so it's worth 1 point. This over here would be worth 2 points, though, because it's a higher high and a higher low. So for a bearish case, you would have had to have looked back far enough to that candle to say, yes, we did in fact have a pullback. So one thing that should be clear here, though, is that this was really starting to turn around at this point. and the quality of that wave compared to the quality of that wave in terms of looking at for phase ones or impulse waves started, the case for that started growing there already, but we're going to get to that in the future. So let's have a look at a bullish case. So I'm going to just start off with this thing as we're right here. So let's assume that we were in fact in a bullish trend and looking at a retracement. So here we did have a bullish impulse candle. We would look at that and say, right, do we have that following a valid pullback? And remember, now we're looking at the bullish case. So we'd look at the preceding candle. In the bullish case, this is worth 2 points because it's got a lower high and a lower low. That on its own would in fact be enough, because we're comparing this candle to this candle, for us to say that that on its own, relative to the preceding candle, is a valid pullback for the bullish case. Where we're at right now, in fact, if this ends up being a bullish impulse candle, which looks very likely in 28 minutes time, then we have to look at the preceding candle, and this one, it has got a lower high and a lower low, and therefore is valid on its own. So let's go and find something that's more bullish, or has been more bullish in any case. Right, so just looking at the case here on the daily time frame, of course. So we're currently in a phase 2 after this very strong bullish breakout last week. And again, this is also a high quality wave. If you look at the full length, and I'm just digressing here a little bit, this full impulse wave here, out of 1, 2, 3, 4, 5, 6 waves, candles, I beg your pardon, in the wave. In fact, there's 7. Out of these 7 candles, and I would even be tempted to include that one and call it 8, 5 of them, 1, 2, 3, 4, 5 of these candles were impulse candles. That's quite a high proportion, especially when you consider that post breakout, we've got 1, 2, 3, 4, 5, 6 candles. 5 out of 6 were impulse candles from breakout. But anyway, that's digressing. Let's have a look at this. If we were to get a bullish impulse candle, let's say tomorrow, and today closed pretty much where it is, would we have a valid pullback? Now, you could say, obviously, yes, because this is an easy example. But if you needed to explain to somebody, or even better, to a computer, why, you'd need to grade that. You'd need to give a very definitive, quantitative answer to that question. So the answer would be, well, if this is our impulse candle here, and therefore our setup candle, we need to look at the preceding candle to see if it constitutes a valid pullback. And the answer here would be, how many points does it have? Well, we've got a lower high and a lower low, which means it gets 2 points. So that on its own is enough to qualify this as a valid pullback. Likewise, that 2, that candle that came before, was also a valid pullback candle offering 2 points, not that it's needed in this case. Let's go to the H4 time frame again and look at this bullish phase 1 wave on daily, which clearly is a trend on H4. Multiple trades we had here through the course of last week, which many of you got. So on the H4 impulse, right. So you only look again when you have a valid impulse candle. So starting right here at the back, let me just expand this so it's easy to see. With the very first trade, I think, that we took, this is clearly a valid impulse candle, which is a setup for a bullish trade on the H4 impulse, the higher time frame selection criteria having clearly been met. So we need to then look to see if it follows a valid pullback. Well, here we have an engulfing candle, which, as you guys know, is worth 1 point, which on its own is not enough. It's got a higher high and a lower low, just 35.9 and 36.3, so 0.4 pips lower. But this is an engulfing candle. So that's 1 point, not enough. This candle here did, however, have a lower high and a lower low, which actually gives us 2 points. So these two together give us our minimum, or above the minimum, of 2, which means that's a valid pullback. Now you might say, well, I can see clearly with my eye that that's a valid pullback, that's fair enough. But this is how you need to look at it when you are struggling with some other situations. This is an easy picture to look at, obviously. So an example of one which is a bit less obvious would potentially be this candle here. And the reason for that, okay, this is clearly a bullish impulse candle, potentially a setup to go long. The preceding candle here was an inside bar, which is not enough on its own, so it's 1 point, but the candle before that is an impulse candle. And therefore, this potentially could disqualify the whole setup. Now, this is the final variation on the theme that I'd like to show you guys. And it's actually one that I find works very well generally across the board. But the only reason we would still have taken this trade here is because the setup candle, being this impulse candle itself, made a lower low and is in itself an engulfing candle. It's actually one of the more powerful setups, as I'm sure you've seen with the impulse strategy, is that when you've got an impulse, beg your pardon, an impulse candle that is also an engulfing candle, then effectively what we're saying is that the low of this candle forms part of the pullback. And this is the final thing that you just mustn't forget. And I just want to make sure I say it so that you folks don't tell me in the future that I didn't tell you. So the low of this candle, even though it's also a setup candle, is in fact part of the pullback. And as you should also know, if you were taking an H4 impulse over here, your stop would in fact be below this point because this is the potential fractal. At the close of this candle, the open of this candle, it's not yet an isolated low. It was only isolated when this candle closed. But we treat that as an isolated low only for engulfing impulse candles, because we need to take into account the fact that price came down that far, and therefore it must have constituted, in fact, the turning point between the phase 2 and the next phase 1. So please do remember that as the final sort of addition to the theme here, is that does in fact, we need to take that into account, and you can give yourself an extra point for that effectively. So we had 1 point here and 1 point there. That means that those two together are enough to go for it. If this was not an engulfing candle, then this picture would in fact have been disqualified because we would have only had the 1 point for the inside bar here, and the preceding candle was in fact an impulse candle. So one last example, just to make sure you guys have got it here. This one here, another setup because we've got an impulse candle. Well, this is also an engulfing candle, which gives us 1 point. So the preceding candle was an inside bar. That means that we got 1 and 1 for both of those. It is true that the candle before that was also an inside candle. It was inside that candle. It was also clearly the engulfing candle for that one. So we had 2 inside candles in a row, 1 point, 1 point. So that certainly means that we had more than enough points to go with. So that would pretty much be it. If we had missed this and we were looking at anything else, say this candle over here, and we'd look at the preceding candle, this would be an engulfing bar, that would actually be worth 1 point, but it's preceded by an impulse candle, which clearly means that this whole thing would have been disqualified. In other words, don't chase the trade. That's just a sort of a rule set that helps you to avoid that. All right, folks, so this is a slightly more intricate topic to talk about. There are, it's always a challenge to take something that is qualitative by nature, and that you might argue the human eye can spot at a distance, and turn it into something that is less subjective and more objective. And if you can't quantify it, then it's impossible to do that. So as I say, if you try to teach somebody something, it's always a good way to figure out if you know how to do it for yourself. But if our goal of absolute consistency in our trading is to be achieved, then we need to have ways to make assessments around these rules, and also be able to measure whether these rules are in fact a valuable addition to the rule set itself, or in fact should be discarded. As I mentioned before, when we're trading convex strategies, then very often a rule which by itself must be a filter, would degrade the performance of the rule set as a whole. It might make you feel better by increasing your success ratio, but it might actually, at the same time, mean that you make less money from the strategy. So as you've seen, the more convex the strategy, the higher the incidence of losing trades. But for the for the same expectancy, it actually provides an opportunity to make more money for less risk. All right, folks, so that's pretty much it in a nutshell. It's a topic, certainly, I think that's worth expanding on, and we will do in the future. If you've got any questions, then please do drop them into the chat box, or of course into the comments below if you're watching the recording.